What's up guys, hope everyone's well. Here I'm going to run through a nice backtesting example on the pound US dollar in the London session. So this one came up today. We can see that we've got nice higher high, higher low, higher high, higher low wave structure where price is clearly bullish. We've got the 50 EMA which has been used to support once and twice. Here it's obviously been used as support again. I was going to look for an entry here, but as you can see, price just came down to the 61 level and bounced off, whereas the zone that I like to look to trade from is the 78.6 and the 71% level. Why do I look to trade from them levels? Well, I'll explain visually. If I was to take a trade from the 61.8 while also covering the last previous low and taking profits to the 23% extension level, you've only got about a 2-to-1 risk to reward. What does that mean? It means that when you win a trade by risking 1%, you make 2%, but then when you lose 1%. So if I was to lose 2 trades and then win 1 trade, I broke even. How I like to trade is from either the 71, where you have about a 3 RR, or even the 78.6, where you have a 4 RR or above 4 RR. With a 4 RR, you can take 5 trades, lose 4 of them, and just win 1 and you've broke even. So imagine you take 5 trades, you win 2 of them, and then you lose 3. You've made money, even though you've lost most of the time. Similar logic with 3RR. If you've got a 3RR and you take 4 trades, you win 1 of them and then lose 3, you've broke even. So it's always better to trade with a higher RR because it means that you need to win less trades in order to make money. Now, trading is just a wagered game of probability. There's nothing about trading that means that you've taken the right position and it's gonna win. There's no it's going to in trading. There's only it's likely to, or it's highly likely to, or it's unlikely to. It's all probability. So you want to make sure that odds are in your favor, and one way that you can do that is by taking higher RR trades, basically. So that's why I don't trade from the 61.8 or the 50. If I do, you would probably have to bring your stop loss a little bit closer, which isn't really in line with my strategy. Like, I'll do this in other strategies, but in this strategy, for example, the trade could come all the way down here and go higher, and it's still continuing the trend. So in order for this strategy, which I call trend continuation, you kind of have to cover that low in order for it to be valid. There is variations where you can take some tighter trades with tighter stops, but for now, I just like to go over the most simple variation for people to understand. So with that being said, you can see the 50 EMA has been respected once, twice, now 3 and 4 times. So what I'm looking to do here is take further trades along this trend where price is moving like this, and I'm just looking for the level that I can get in here and then take my profits when price gets here. Simple, right? So we've analysed that price is bullish, got the EMA being used as support, price is making higher highs and higher lows which are clear to read. What we're looking for in this scenario is for price to come back down to our level and then push higher. Okay, so let's see how that plays out. Okay, so what you'd notice is that price is double topping. So there's one and there's a double top. In this scenario, what I'm wary of is the fact that the EMA has been broken. Now, it wasn't an extreme break. It broke below for a few candles and then price was desperate to get back inside that trend. So I wouldn't fully class that as the EMA being disrespected because we're still following the trend here. It is just something to be aware of, and what I usually like to do at that point is go up a time frame. So here you can see that the 5-minute EMA is being respected. It hasn't been directly used as support, but price is still respecting it because it's above it and is making higher highs and higher lows above it, and it hasn't yet disrespected it at this point. Price is still a lot clearer on the 2-minute, so I'll stay on the 2-minute just to watch the wave structure. But that's sort of what's going through my head at this point in time. Alright, so now it's a little bit different. Price has actually broke above and created a new high. So within our wave structure, this is a higher high because now price is broke above. And then that makes this the lower low. because it's the lowest point that price reached after this high before price then broke higher. So this is where we're looking at higher high and higher low. What we need to wait for now, following this logic, that's the logic we look for, we need to wait for this area, so this next higher high, to present itself in the form of a rejection. So I'll move this out of the way. Still printing highs. So take the fib from this low to this high, and what I'm looking for again is this key level to be met. Okay, right, so this EMA has been broken, which is key, but I already told you it was broken here, so I'm really looking for this on the 5 minute now. That's what I'm really concerned about. So the 5 minute looks like it's coming into play here, and it's been respected up until this point. We're entering the zone 71.78.6, and we look to have our higher high there. So I'm going to go back on the 2 minute so I can really see what's happening on the candles, and I'm going to wait for some form of candlestick rejection here, right? Something like a hammer, something like a doji, something like a spinning top. Okay, so we've got a hammer candle here, but we have a rejection candlestick within our zone, okay, and this is at a pretty good level. So this is a level that you could take a buy from, put your stop loss below that low there, and put your TP at the 23% extension level, okay. There you've got a 4.74 risk to reward trade. So if you risk 1% on this trade, you're going to make 4.74% on the upside. Let's see how this one plays out then. Okay, there you have it, pretty fast. There you've got a 4.74% trade. Let's get the measure tool. And you just made 4.74% within 18 minutes of just being in the market, or 16 minutes should I say. So what did we follow here? We followed this logic, a higher low, a higher high, and then we look to buy in at this higher low to ride price to the upside to just continue that trade. Super simple. Price is trending. We're on the lower time frame, so this is on the 2 minute currently. We're on the lower time frames looking at the little heartbeat of the market, and we're just strategically seeing that price is going higher, making higher highs and higher lows, and we've looked for a level to get into the market at a respectable point that would mean that we win a lot more when we win than we lose when we lose. So we've taken a strategic, measured approach to trading. We're looking for signs of confirmation when prices came to our level. We've got a rejection candlestick from our desired zone. That's allowed us to get into the market with some form of confirmation to ride price higher. So I hope that made sense. I'm trying to break these down on a more beginner level now so that people really understand, because it's hard when you've been doing what I've been doing for 7 years and you kind of talk in ways that you understand, but I'm trying to break it down on a more simpler level now. So please give me feedback on these lessons if they're helping and stuff like that. And I hope that it's sort of making sense the more that you go along with my strategy. So until next time, I hope that's been a valuable lesson. Hope you're starting to apply this to your own charts now as well. Until next time, have a good one.